Hi everyone and welcome back to China Perspective. My name is 𝗵𝗵𝗁𝗂𝘀 and you may know me as a German recruiter in Asia. Today we're diving into a slightly more financial topic, but one that nonetheless is becoming increasingly important given the current geopolitical tensions we have between China and the US. So we all know and use SWIFT. You and me and everybody else uses it daily for our normal bank transfers and financial transactions. But did you know that China has been for quite some time working on an alternative to SWIFT? Yeah, they have. And right now, with a rough climate we've been having between the US and China, they're extremely motivated to drastically speed up its development. So in case you don't know, I'm a recruiter here in China. I'm focusing on the Chinese and Asian market. Most of my clients are international companies in the industrial B2B sectors, but really it doesn't matter what industry you are in or where you are based. Chances are that CIPS, the SWIFT alternative, is coming to your doorstep or banking process faster than you think. So what is SWIFT and what is CIPS? SWIFT stands for the Society for Worldwide Interbank Financial Telecommunication and was created in 1973 in Belgium, which makes it a European institution. It was founded by a group of Western banks. Its original purpose was to create a neutral, secure, standardized way for banks to worldwide exchange payment information. However, as many things developed in the West are, when they say neutral, they usually mean neutral from the point of view of Western economies. And before we get into a heated debate about it, that's not what I want to do. It's just, put yourself in the shoes of any other country or region other than yours. While SWIFT aims to be neutral and balanced, we cannot ignore the fact that the main usage of the US dollar means that the US has a greater influence into global infrastructure, including SWIFT, than other countries. As an example, the US was successful in pressuring SWIFT, despite being a European entity, into sanctions towards Iran and Russia. And I'm not saying anything about the justification of these sanctions. I'm just saying that it is, very understandable for any non-Western country to look at the possibility of this and have some very valid concerns for themselves. Even European and other organizations are forced to comply with the sanctions imposed by the US to avoid being cut off from the dollar system or facing penalties, even if they are not based in the US. This compliance often extends to SWIFT-related activities. So, to be clear, the US does not own or run SWIFT, but due to the dominance of the dollar and due to geopolitical clout and due to global compliance with US sanctions, it holds a considerable indirect power over how SWIFT operates, especially in politically sensitive context. But let's get back to the differences between SWIFT and CIPS. So what's important to note is that SWIFT is not a payment system. It is a messaging network. So you could think of it like an international post office that securely sends transaction instructions between one bank and another. The money itself moves separately. However, CIPS, or the Cross-Border Interbank Payment System, is much, much younger and works a little bit differently. It was launched in 2015 by the People's Bank of China. So CIPS combines messaging and settlement, meaning it not only sends the instruction, but actually moves the RMB funds across borders or domestically. This is a very big difference. So that means that yes, CIPS is regulated and governed by the People's Bank of China. And yes, that does mean that it is not a neutral organization either. The People's Bank of China is controlled by the Chinese government. There's no discussion about it. Any concerns anyone may have about the very subjective neutrality of SWIFT is completely correct to have the exact same concerns about CIPS. And if you've seen my YouTube video China 2025 versus China 2035, then you know the next decade is all about setting and influencing global standards for China. I will link the video for you in the descriptions below. So if SWIFT is like sending a letter, CIPS is more like sending a courier with the actual package. Both use the same technical messaging standards. That's ISO 20022, if you like the technical term. This means they can theoretically talk to the same financial world. So the question is, why is China pushing CIPS? China has two very clear goals for these, and they are not secret. The Chinese government has been very open about it. There have been lots of planning, lots of publications, there have been discussions and so on. So no country really can claim to be surprised by this. And if you are, I would encourage you to search online. Most of this information is translated into English and many other languages as well. I was actually recently working on a search project for a CFO here in China for an international firm, and the candidate was asked about his understanding in this regard. That also means that if you are working in China or with China, it would be good to have at least, a working knowledge of these guidelines and strategies. So what are the two main goals that China has? Goal number one is make the RMB a true international currency. Goal number two, de-risk from the US dollar and SWIFT in case of an escalating conflict with the US and to protect themselves from American attacks to its economy. In reality, as of today, the absolute large majority of all companies globally, including Chinese companies doing business with overseas entities, are using SWIFT and using the US dollar as a currency. So right now, even Chinese companies often settle international deals in US dollars. As of March this year, 2025, the top three most used currencies in global payments, according to SWIFT data, were United States dollar, 49%, the euro with almost 22%, and the British pound sterling with 6.6%, and only on place number 4, the Chinese RMB with 4.1%. So what does it mean? That means from a Chinese point of view, there's a lot of room for growth and improvement. But as of today, if you are a supplier in Ningbo or Guangzhou or Tianjin, selling to a buyer in Frankfurt, in Milan, and in Paris or Buenos Aires, chances are that you are both paying in US dollar. As China is a very export-oriented economy, that creates dependency on the US financial system and critically on SWIFT. China's share of exports in GDP amounted to approximately 18.9% or so in 2024, increasing slightly from the previous year, 2023. The total Chinese merchandise export value amounted to somewhere around 25.5 trillion yuan that year, which is roughly $3.5 trillion US. And even though we have seen a surge in exports in March this year before the tariffs from the US became active, and we are seeing a bit of a slowdown in exports in April and May, and now since the 90-day break is starting another big increase, despite this up and down rodeo, the general magnitude of this value is just too ginormous to not be taken serious by the Chinese leadership. There's a real danger for the economy and the country if 20% or so of the GDP would be hindered by a SWIFT system. Therefore, from a Chinese point of view, it makes total sense to build up a contingency plan, especially looking in the very recent history with Russia, how countries can be cut out of the system. I know many companies doing business with Russia or Russian firms just trying to continue doing business and trying to survive. I've heard some stories of my clients, about middlemen, companies setting up in Dubai or other country payment system, routing whichever which way via quite dubious channels. It creates massive problems for companies having to operate in such an environment. So by building and expanding CIPS, China is trying to create an alternative route for cross-border payments, especially for transactions denominated in RMB. It's a very long-term move to reduce vulnerability, and especially today when we can certainly not fault them for this point of view. So who is using CIPS so far? As of March 2025, we've already seen some serious development. First, we have around 170 direct participants. This means they are large banks or institutions with significant cross-border RMB business that have their own CIPS account. They can send and receive messages and payments through CIPS. And then we have nearly 1,500 indirect participants. These organizations or institutions do not have their own CIPS account, but can still use it for transactions. So basically what they do is use CIPS for a direct participant, which is actually similar to how some smaller banks use correspondence. This is something that China is quite open to, mainly because it simply widens the pool of organizations that use CIPS, and the more market players that use it, the better for CIPS. So out of the 1,500 indirect participants, about 550 or so are from inside China at the moment. The rest is international. Over 4,900 banks across 186 countries and regions are connected, and already the government is strongly pushing its wider expansion. Strong adoption regions include Asia, unsurprisingly the strongest. HSBC, Hong Kong joined CIPS as a direct participant in 2024, enhancing the system's reach. Several countries along the Belt and Road Initiative have also agreed to start adopting CIPS to facilitate trade and investment in RMB, thereby reducing reliance on the US dollar. In Europe, we see steady growth. More and more institutions are joining, for example, Deutsche Bank, BNP Paribas, Standard Chartered, and a few more. Europe had in February 2025 around 250 or so active participants. Their main reason is that participating in CIPS allows banks to support their clients' growing demand for RMB trade and payment solutions. In Africa and Latin America, we also see growing interest, especially among Belt and Road Initiative countries. Both Africa as well as Latin America are slowly but gradually increasing their participation in CIPS, mainly because their trade with China has been increasing and continues to increase. So it's just much easier and much more advantageous for them to use the system, which are often same-day processing. So that also means that you may already be using CIPS without being aware yourself. If your company is dealing with partners in Southeast Asia, Central Asia, or Africa, there's a good chance some payments are already touching the CIPS network behind the scenes, even if you don't know. And so now the big question, is CIPS really a competitor to SWIFT? Short answer, not yet. But the trend is unmistakable. CIPS was initiated only around 10 years ago in 2015. Now we have 2025 and China faces an increased pressure from the US with the trade war and tariffs. Just recently, in April 2025, the government made a renewed announcement to accelerate the expansion and integration of CIPS into the global market, not only to keep and extend the existing trade between China and other countries, but to also help the countless Chinese companies which are going global. I have a different video about Chinese firms going global en masse, which you can find on my channel. Basically, if you thought the auto industry and BYD & Co. was a one-timer or one industry event, I would like to invite you to not blink, because if you open your eyes again, this will have played out in many, many other industries. We already see it in tech, gadgets, phones, household appliances. Watch out for the aerospace industry to come and many other industries as well. We do live in very transformative times. So whatever you think is happening with Chinese firms going global, trade war or not, it is at least 100 times that. But as of today, SWIFT is still the global giant, connecting over 11,000 institutions in more than 200 countries. This means CIPS is less than half of SWIFT at the moment. Most international trade, including Chinese exports, still heavily rely on SWIFT and US dollar settlements. But here's the thing. CIPS isn't trying to beat SWIFT at its own game overnight. It is slowly carving out a parallel ecosystem, especially for RMB-based trade flows. China is actually not trying to reduce the usage of SWIFT. China is not trying to use SWIFT as a means to hinder the economies of the West or other economies that are using SWIFT to do any kind of business. China's main motivation is to protect itself against becoming a victim to geopolitics in the current West-dominated SWIFT system. I think this is very important to highlight because, you know what, many individuals feel that China is very, hostile in many actions, or at least it is how it's portrayed in the Western media, maybe in your media as well. Most of the great advancements in China's world in the recent years have been because the West has tried to punish China, be it the limit to semiconductors or the threat of payment systems, which has driven China to invent, develop, push its own system to reduce these risks. And then, of course, due to size and proper large-scale adoption, it is perceived as a risk from the other countries. And yes, now the Chinese government is prioritizing it and wanting it to grow as big as possible. For example, just last month, the Chinese government officially urged major state-owned companies to increase RMB use abroad and prioritize CIPS wherever possible, especially large state-owned companies engaged in the outbound investment to prioritize the use of yuan in cross-border payments and settlements to help drive the broader adoption of the currency across the ecosystem according to their action plan. So one anecdote from a client I was visiting in their factory last month. So it's a large European automotive parts manufacturer. And he was like, Miriam, we used to accept dollar invoices from our Chinese suppliers, and now we're getting more proposals to switch to RMB. So this is happening quietly, but it's happening. And because everything in China is happening in China's speed, even more so when the government puts its concentrated weight behind it, I would guesstimate that already in 3 years we will see a dramatic increase in CIPS payments across the globe. And now you may ask, why does this matter for you and your company? So if you work in manufacturing, procurement, logistics, or really any international operation dealing with China, you will increasingly see two realities. Traditional SWIFT and US dollar systems will still be dominant, and a growing RMB payment world supported by CIPS. Choosing between them will be a lot less about ideology and a lot more about business pragmatism. In terms of speed and cost, considerations that RMB settlements with CIPS can be faster and cheaper for some trades. There's also risk management. Being able to transact outside SWIFT could be a hedge against future political risks or sanctions. It also depends on customer demands. If you have a Chinese client or supplier and they insist on RMB payments with CIPS, you'll need to adapt. In the end of the day, as long as we do not see global geopolitics escalate further and a cutting off China-wide SWIFT system, you will probably for quite some time have the chance to use both. However, I would like to recommend that you familiarize yourself with CIPS and try it out, so that in case of emergency, you're not left in the dark. There is a wild card, what we don't know how it will be evolving, and that could be potential counter pressure from the US. As we see now in the trade war, where the American president has threatened other countries with consequences if they make a deal with China. Something similar to SWIFT is not strictly unthinkable, even though I've not heard about it officially. If at some point the US would start to limit the expansion of CIPS to maintain the advantages Western countries have with the SWIFT system, then it becomes important from a business perspective, and companies across the globe have to be aware. Financial infrastructure is becoming a factor in geopolitical risk management. So what can little business people do? If you're like me, just trying to run a business and try to make a living in this increasingly complex world, we often find ourselves caught between two giants who throw rocks at each other, and some of these rocks tend to fall on us little people everywhere, really. So if you're running a business today, especially in any field that has global suppliers, global clients, or global trade, then I would encourage you to stay calm, but also stay aware of how payments evolve. Be open to setting up dual systems, still transacting through SWIFT, but having CIPS capabilities ready if needed. Protect yourself by having alternatives to keep your business running. Talk to your banks or talk to your financial partners. They should already be offering CIPS-compatible solutions. Personally, having lived through so many changes in China's business environment over the last 15 or so years, this feels like one of those slow but inevitable shifts. Not loud, not dramatic, but persistent. So it's always better to anticipate these shifts and not react when it's too late. If you found this helpful, please like and follow China Perspective. It would really help out my channel, and I would appreciate it so much to count you as a subscriber. And let me know in the comments, do you think CIPS will become a serious challenger to SWIFT? And if so, by when? I'd love to hear your views. Thank you for watching and see you next time. Bye, guys.